All right, good afternoon, everybody. Hope you had a fantastic weekend. Hope you're ready to rock and roll this week. Um, we actually got a couple of economic reports coming out this week um, that could cause us to see a little bit of a pullback from our run up here recently over the last week and a half. So SPX is currently sitting right at the 50-day right now. Good squeeze pointing up, but we do got a lot. Monday is the only day with nothing going on. But after that, there are quite a bit of reporting. Also, the Feds are also this week, so I'm kind of leaning a little bit to the downside this coming week, just to kind of play a little bit safe. But I do have one long play for you. So let's go ahead and jump right on into this. And the first one that I'm looking at is gonna be a firm, right? AFRM. So I like this to the downside. Now, those that are familiar with chart patterns, you can see here that there is a little bit of a head and shoulders starting to form. So I'm ideally watching this level right here. I should use. All right, I'm watching this 2640 level. If this breaks, this will turn into a bearish play. Even though, it got a good run up. You can see that upward momentum there. It really bounced off its 1-year low. And it made some higher lows here, pushing all the way up. But with Friday's pullback all the way to really support from, looks like Wednesday, I'm watching this for a break of 2640. If it breaks 2640, yes, you got the 50-day there, which isn't too much. It's about $2 down. But potentially, if it breaks that, it's got run room down here to 20. Okay, so I'm watching this for a downside play. And on a firm, we're going to be in September. Some stocks you'll be able to get these weeklies on, but they're really wide or not a lot of liquidity on it. So going out to September here. Excuse me. All right. So going out to September monthly. Yeah, it's 54 days out. It's a little out there, but again, I don't like the liquidity in the strikes weeklies there. So for this one, I'm actually looking at, let me break it back. The defined risk play, I'm looking at a 35 call spread. Okay, reasonable, a little bit of resistance there, right? This is support, and when it breaks, resistance. So this resistance level 35, right, for your defined risk. And for your undefined risk play, I'm looking at the 42.5. So even significantly higher up here. I see this breakdown. So September 35, 37.5 call spread. Ideally, I would want 50 cents for this, since 2.5 wide on the call side. That way, with 2 contracts, you get that dollar right at the expected move. A little bit higher than I like on the deltas, but kind of the only way to get a reasonable defined risk play. Okay, and it's a 79 pop. You get 12 short deltas. You're risking 4 to make 1. But all in all, not a bad play. Okay, and then that undefined risk play would be all the way over here. You probably that one, but we'll call it the 42.5 calls, which is going to be $5-6 past the expected move. You get $1.06 or better. I mean, you can see it's not that wide. 115. You probably get close to 109 on this play, and it's 1 contract. You're going to get an 89 pop, so substantially better. 20 short deltas, and it's $1, right, for $900 to put on. Not bad. The next one is CCL, and I actually wanted to lean this one short, but I couldn't get enough credit with just a call. And yes, it is in a downtrend, okay? But we have that little bit of consolidation here at the 1-year low. I'm looking at pretty much just this channel right here. What I'm looking at. This is sideways. Overall trend is down. So in order to get that short delta, I'm looking at a short call, okay, financing it with a short put just to get that little extra credit to get it to something. So I like the idea of selling this 12.5 call, okay, and then selling a 6 put down past. I actually think, yeah, it's actually the 2-year low, 8.1. So you're gonna be $2 past 2-year low. Okay, and I just want to see this go sideways for a little bit more, slightly short skewed, so a couple of down days would be cool. So this one, I'm gonna try to get the weekly August 26th, which is 33 days. Right, it's fairly tight spreads, 4 cents here, 4 cents there. Volume is a little light though, right? So on CCL, August 26th, selling those 6 puts at an 8 delta and selling those 12.5 calls at a 12 delta. It's right now 24 cents. So ideally, I'd like to get 25 4 contracts. That way, you get $100 for $950 in buying power. You ultimately get right around 19 short deltas, very short skewed here, and an 86 pop. Okay, no defined risk on it. All right. Next one is going to be GDX. Okay, Gold Miners ETF. So gold's been taking a hit lately as well, and just been dropping down, making new lows. Actually, this is also a 2-year low. It is 1-year and 2-year low here at 20, pretty much 25, 24.90. So looking to keep this one going down. You got a little bit of consolidation last week and to the end of last week. I'm sorry, into the following week, higher and all the way this week. So I just want to take this one short. Okay, defined risk would be like these 27.5 call spreads right at resistance, and then a naked play at 29, pretty much just right up there at that 50-day. Want to see it kind of come down, break this 2-year low. So on GDX, August 26th, another weekly. Not a lot of liquidity here, but spreads are fairly tight. Ideally, this would be $1.50 wide because it's not enough credit, so I'm okay with this. But 27.5 call and buying those 29s, ideally I'd like to get 30 cents for it. That way, you know, with 4 contracts, that's $120 in credit. You're under $500 of risk. You've got a whole lot of short delta, 50 short deltas here. And it's pretty much an 80% probability, not right at 79%. Okay. And then that undefined one would be these 29s at 25 cents. Okay, that way you also get $100 for a grand, 63 short deltas, and you jump all the way up to an 8 pop, almost a 90% play, dollar past the expected. Right. And then now the last one is going to be an upside play, and that's Netflix. Oddly enough, I kind of like it to the upside here. All right. Netflix, after multiple horrible earnings with gap downs, it actually gapped up finally, showing some upward momentum here. We got the curvature 50-day. We're trading above it. It's holding. So we got a little bit of resistance coming up here soon at about 200. I'm just going to call it 250, 248.70. All right. But if it blows through that, it's got run room all the way back up to the 332 level. That's a big run. It's 100 points from where it's at right now. So I would like to see, and now this one's an expensive one. So ideally, I'm looking at a 200 put spread right at support. Okay, area here. Support. So looking at a 200 put spread at support. And I want to see this run up into resistance, break that 250 and keep going. For those that don't mind a little bit larger buying power, selling a 160 put spread down past support, which also a 2-year low. Okay, 1 and 2-year low here. You'll be $2.70 past the 2-year low. A lot farther out of the money here. Okay, and like I said, run up to 2. So Netflix, this will be September because of the liquidity. Those with the larger accounts, I like the 160 puts at a 7 delta, okay, you're $30, $32 past the expected move for this cycle. Get it at a, depending on where it's at, let's just call it $1.70 to $1.75. It depends if it's up or down tomorrow. Okay. Great 94% probability. That's huge. That's wonderful. All right. But it's $170 for about $1,600 in buying power. Those that want to keep things defined risk, I would go up here to the 200, 195s and try to get at least $1.30. All right. Why not here? To me, even though it's 32 delta, I want to stay below the 50. 50 days currently trading at 204.17. If you hit those 205s, you're going to be, right above it. So I like to stay a little bit below it here, especially for Netflix. Try to get at least $1.30 though at the 200, 195s. Top is great, 60%, $1.30, and max loss is set. So that's going to be it, you guys. That's what I'm watching this week. All right. And have a great rest of your weekend. Hopefully one day I will see you guys in chat. Take care.